Welcome all to the day 4 session of F5. So first of all, any query regarding day 3 session or even any topic, I believe. Yesterday we discussed, basically we covered the topic of budgeting and variances. So any question? Any question? So now I haven't received any question right now, so I presume there is none. So let's discuss or proceed our day 4 session. Our today's session will be focusing more on the assessment of performance. And that was the reason that I hadn't discussed the assessment of performance in the variance as well. So how to assess the performance? And for that, we have to understand what the performance is. The performance is basically an opinion that whether it is good or bad. And to assess the performance, we require two things. One is the criteria of performance, we call it indicators, and the comparison. We cannot assess the performance without comparison. Now, as far as variance is concerned, there are managers who are responsible for some variances. For example, generally as far as material prices are concerned, it is the responsibility of purchase manager to buy the material at an appropriate price. And as far as material usage is concerned, it is generally the responsibility of production manager. But obviously we have to see that in the scenario. So for example, in this question, the production manager at Bedco is responsible for all buying and any production issue. So that means the responsibility of, it is the responsibility of the production manager for price variance as well as usage variance. The other key factor in the performance appraisal should be that on whichever grounds we are assessing the performance, this should be controllable. So we will not assess the performance on the issues based on the factors which are beyond the control of the management, right? So when you have to assess the performance of the production manager for the month of November, what you should do is, you should do it in 4 key points. You should do it in 4 key points. The first one is, you have to assess the variance, that how much the variance is, whether it is a favorable variance or an adverse variance. This is the first task you will be performing. Now, you identify the reason. Identify the reason. Within that, you also see whether the reason is controllable or not. Now, based upon the reasons, You will then conclude the performance of the manager. Now, if you talk about this question, there are two aspects of performance management of the production manager. So, production manager performance. And this includes, number one, the performance in purchasing, and the variance relevant will be the price variance. And the other one is performance related to usage. And for this, you will be referring the usage variance. Now, within each aspect, I will be assessing the variance. Then I will try to identify the reasons and see whether these reasons are controllable or not. If the reasons are not controllable, if the reasons are beyond the control of the management, we will not make any opinion on that. But if the reasons are controllable, so based on these reasons, I will conclude the performance in the specific area. So let's talk about the price variance first. And this was the price variance. So there was material price variance and material price planning variance rather, and material price operational variance. So let's write that. The material price planning variance is, let me unbold it, $343,000 adverse 343,000, and the operational price variance is 68,600. Favorable, of course. So in the first line, I have assessed the performance. Let me give three different colors so that you all can understand that I have done all the 3 points. So I will be giving yellow color to the assessment of the performance. I will be giving green color to the, as far as identification is concerned, and then finally the light blue color for the conclusion. So the first part is on the assessment of the performance. Now I will identify the reasons. Now remember that all these reasons should be in your question, but if you don't find the reason, then you will write some possibility reason that could be possible. So the reason for the price variance was, first of all, the planning variance was that the world commodity price of the cotton is increased by 20%. So I will write the reason for the price planning variance is due to increase in world commodity prices by 20%. And this is the reason for the adverse price planning variance. Now, what is the reason for the operational price variance? So there is no information on that. Now, because there is no information, so I will try to assume, or rather try to find a reason which could be possible. So I will be discussing a possible reason. The possible reason for the operational price variance is, let me see what is the operational variances are. So you can see it is adverse. So that means I could write the reason as the production manager has sourced cheaper quality material which is less expensive. Now, this is the reason which is not given in the question, but I have just assessed that or assumed that. Right? So this is what my assessment of the reason for the variance. And based on that, I will now conclude, because the operational variance which deemed to be controllable is favorable. So we can say that the performance of the production manager in the area of buying material is satisfactory, or you can write good. So this is what I have done for the, as far as the concluding point is concerned, right? Similarly, I can assess the performance of the production manager that relate to usage variance. And for that, I will once again, first of all, assessing the variance. So it will be the material usage planning variance is how much the variance was? It was 45,000 adverse. So adverse 45,000 and material operational usage variance is adverse 20,000. Now I will be going to the reason. The reason for the adverse material usage planning is due to the change in design of pillowcase. I think the change in design was of the pillowcase. Yes, the pillowcases. And this is clearly not in control of the manager. But what about the operational variance? 20,000 adverse. Now this might be due to the cheaper material that had bought, resulting in more wastage than expected. But we have to assess now the overall performance. When I have to conclude, I have to assess the overall performance, that whether the buying a cheaper quality material was being overall beneficial for the company or not. So if you can analyze that, the variance due to that was adverse 20,000, but the price favorable variance was 68,600. Now I will conclude. So overall, the production manager has been able to save 48,600, and this has been done by 68,600 favorable variance due to price and 20,000 adverse variance due to usage. I'm talking about only the operational variance. So overall, the production manager has been able to save 48,600, and hence the overall performance is satisfactory. Right? So this is how you are going to do that. Let me highlight it for you. So once again, this was my first point, assessment of variance. The second point was on the reasons. I will be highlighting it in green. And then I had discussed the overall conclusion. and this will be in blue. So this will be my answer. Right? Now let's move on to the purely performance management question. So let's first of all, as we'll read the requirement. And the first requirement in this question is, under the current transfer pricing system, prepare a profit statement showing the profit for each of the division and for the bath company as a whole. Your sales and cost figures should be split into external sales and internal division transfers where appropriate. So according to the first requirement, we have to prepare a profit statement, and I have to separately identify the external revenue as well as internal transfer revenue. The second requirement is calculate the maximum profit that could be earned by a bath company if transfer pricing is optimized. So this means that this is the question is on transfer pricing. So now let us all read the background information and then we will discuss the question. Right? So as usual, I will be switching off my camera and muting my mic so that you all can read the information, extract the data carefully, and then we will discuss it. So I hope you all have read the question, rather the background information. Have you all read that? Have you all read it or not? There is no opinion from your side, and I'm waiting for that. So anyway, I assume there is that everybody has read that. Let's assume that and discuss it further. But before answering this question, there is a question from the student, which is that in the exam, are you all be able to color the text that I had just done it in one of my answer like these? So to answer your question, first of all, yes, you can do that. But I highly disrecommend it. I will not recommend to color the paragraphs because it doesn't look professional. It will never look professional. The idea behind coloring my answer was so that once you read my answer, you can clearly know which one is the assessment, which one is the identification of the reason, and which one is the conclusion of the performance. If I could rephrase the way in which my exam answer will be look like, so there will be no color, and I will also don't write the steps as well. So this will be my complete answer. Let me just zoom out a bit, because the objective is not to read the answer but to show you how your final answer will look like. So this is the complete answer that you should be presenting it to the examiner, right? So anything else? So now let's discuss the question number 1, which is known as path company. So we have two divisions, and generally this should be the case in the transfer pricing, that there will be two divisions, at least two divisions rather. One division is selling the component to the other division or transferring the component to the other division. And here in this case, division A is receiving the component, whereas division B is transferring the component. Division B will prepare the fittings and then transfer it to division A. Now, the way I do is I always make the heading of the transferring division, the division who is transferring the component first, and the division who is receiving the component second. This is my way of doing things. Because the first the component is produced, then it is transferred to the next division. And now for that, first of all, let's prepare the income statement format. So this should be sales. Sales should be of two types. One is internal, and the other one was external. I have to specifically mention internal and external separately because the requirement has asked me to do so. Your sales and cost figure should be split into external sales and internal division transfer sale. Right? So this should be split. Then there will be cost, and the cost includes internal cost. Then there is the cost of material, labor, and the overheads. So when you subtract the cost from the sales, I will get the profit. But this will be the profit for each division. So to calculate the corporate profit, I will simply add the profits of both of the divisions. Now let's solve it. So first of all, let's solve division B. So currently, division B is transferring 80,000 units to division A at a price of 75. So this internal sales will be 80,000 multiplied by 75. So it is 6 million. Let me convert it into 2 decimal place and in the accounting one. Rather, I've used the 0 decimal place, but I've used the comma separators this time. Right? Now, what about the external sales? Although the demand is 180,000, but in the current situation, we will only be able to sell 120,000 units. This is because I have the production capacity of 200,000 and 80,000 out of these has already been transferred to division A. So I have left with only 120,000 units, which I will sell to the external customer at $80. So this will be equal 120,000 multiplied by 80. So it is 9.6 million. Now if I make it bold and sum both of these, my total sales revenue will be $15.6 million. Now let's talk about the internal cost. So there is not any transfer received by division B, so the internal cost will be 0. But as far as material is concerned, division B will be preparing 200,000 fittings. Each fitting material costs $5. That means the material cost is 1 million. Now the labor cost will be equal 200,000 fittings multiplied by 15 because the labor cost is $15. So it is 3 million. And then 4.4 million will be the overheads as provided in the question. So the cost will be internal cost plus material cost plus labor cost plus overheads. So it is 8.4 million. Hence, the profit for the division B will be the total revenue minus the total cost. So it is 7.2 million. Similarly, let's now work out division A. Now division A is not selling anything to the any other division, so its internal sales will be 0. And division A is selling all its 80,000 units to the external customers at a price of 450. So that means the total sale for division A will be $36 million, all of which will be sold to the external customers. Now let's talk about the internal cost. Division A will receive the internal cost, which is 6 million. So you can observe that this is what you can observe, that the internal sales of division B is the internal cost of division A. Now let's calculate the other cost. So material cost will be equal 80,000 multiplied by 75. The labor cost will be equal 80,000 multiplied by sorry, I did one mistake. 75 was not the material cost, it was the cost of the fittings. Material cost was 200. So let me rectify it. So this will be 16 million. The labor cost will be 80,000 multiplied by 45, the labor cost. And the annual fixed overheads are 7.44 billion. So that means the division A profit will be the cost will be 33.04 billion and the profit will be 2.96 million. Also, the corporate profit will then be the 7.2 billion profit plus 2.96 million profit. So this will be 10.16 billion. So any question? Any question up till now? Well, it seems the box of questions is not appearing on my application. So let me see my moderator's computer to view any questions if you have. Yes, there are. So one of the students has asked, sir, why we haven't subtracted fixed cost of each division from their contributions? Here we did that. We did that. Right? We have subtracted the overheads. We had subtracted the overheads to determine the profit. You can see that in the total cost, in the total cost, the fixed overheads are included. So we have not ignored that. Now coming to the requirement B, and in that head office is now considering changing the transfer pricing policy. And because of the changing transfer pricing policy, we have to first assess what could be the appropriate price now. So we have, first of all, to discuss B, we have to find the appropriate price and units to be transferred. Now the appropriate price will depend on what is the maximum price that could be charged and the minimum price. The maximum price is the price which is looked upon by the buying division, which is division A in this case. And this should be the market price. This should be the market price. And in the question we have been told that the division A can source the same material at 65. So that means division A is maximum willing to sell or willing to buy at a price of $65 each. Now, as far as minimum price is concerned, there are two different categories. First, 180,000 units, for which the external demand exists. Now, because division B, by the way, as far as minimum price is concerned, this will be relevant for the selling division, which is division B in this case. So division B has, for first 180,000 units, he has the opportunity to sell at $80 price. Right? But for the remaining 20,000 units, for which no external demand exists, his minimum price will be the variable cost of each unit, which is 20, I guess. This is 5 for the material and 15 for the labor. So it is 20. So you can see that as far as the first 180,000 units are concerned, there won't be any agreement. There won't be any agreement on price. This is because division A is not willing to pay more than 65 and division B is not willing to buy less than $80. So there can't be any agreement on that. And that is the reason we will not transfer the 180,000 units. Now what about the remaining 20,000? So now because the minimum price is 20 and the maximum price is 65, so there are high chances there will be an agreement to transfer the components between divisions. But at what price? So although any price between 65 and 20 is acceptable to both, but to be fair side, to be on the fair side, this should be based on market price, which is 65. Right? Any question up till now? So now once you have decided that you are going to transfer 20,000 units at the price of $65, we will prepare the income statement and incorporating these two values. Now, as far as an exam is concerned, I will do it in a quick way. But first of all, simply copy and paste the existing format like this. I will now change the relevant data. For example, my internal sales will be changed. This is because now I am selling 20,000 units at a price of 65. So my internal sales will be $1.3 million now with the new policy. Let me see one more question. And it is, okay, so one of the students has requested me to revise the number of units to be transferred. So let me explain that. So the maximum price is the price at which the buying division is at most willing to pay. And the maximum price for the division A will be the market price. Because, for example, if the division becomes autonomous, and if division B offered the same unit at a price of 66, the division A will not buy that component from division B. Rather, they prefer it to buy it from an external supplier who is supplying them at a price of 65. So the maximum division A is willing to pay is 65. Now coming to the division B, they have the production capacity of 200,000 units. Now for the 180,000 units, they have clearly a demand, the external demand over here. So for the first 180,000 units, if division A does not accept it, then division B will be able to sell it to the external supplier at a price of $80. For each from the first 180,000 units, and for every 1 unit that is transferred to division A, division B will suffer an opportunity cost of $80 because they will not be able to sell it to the external supplier. But this is for the 180,000 units at which demand exists. But for the remaining 20,000 units, the only relevant cost would be the variable cost. So it will be $20. So now when you compare it, you see that division A, the maximum price of division A is less and the minimum price is higher. So it is unnatural. And whenever this situation arises, there won't be any agreement on that. And this will mean division B will not transfer 180,000 units to division A. Now same is for the other 20,000 units. But over here, the minimum price was $20. So anything above was acceptable to division B. And so the transfer price could either be any price from 20 to 65. It could be 23, it could be 30, it could be 40, any price. It won't affect the corporate profit. But in such situations, we will transfer a price at a fair market value, which is 65. So the transfer price is set to 65 for 20,000 units. For 180,000 units, I am not transferring it. So now let's move on. So internal sales has been done. 20,000 units I am transferring to division A at a price of 65. And that means I will be able to sell to my external customers 180,000 units and not 120,000. Right? So this means the division B overall sales will be $15.7 million. There won't be any change in the material cost, labor cost, and overheads with that. So the division B transfer after the proposed policy, the division B's profit will be 8.4 billion. Now let's talk about division A. Division A is not still not selling anything to the internal, so its internal sales will be zero. It won't affect. A is still selling 80,000 units at a price of 450 to the external customers, so this valuation will not affect as well. Internal cost will be changed because I have reflected it from the internal sales, so this has already been adjusted. This will always be same. Internal sales should always be equal to internal cost. But there is a slight change in the material cost. And what is that? This 80,000 into 200 is related to the other related material. But now because division B has transferred 20,000 fittings to division A, that means division A has to buy the remaining 60,000 fittings from the external supplier. And for that, I have to add the material cost of that as well, which is 60,000 into 65. There won't be any change in labor and overheads. So the total cost and the operating profit will change. And now when you calculate the combined profit, it will be 11.06 million. 11.06 million. So clearly you can see that by using the proposed policy, by using an optimized transfer price, our corporate profit has jumped from 10.16 million to 11.06 million. So clearly the profits has increased. So any question? Any question right now? So I haven't taken any question from any student. So that means I will be moving on to the next requirement. Now the next requirement is also on the divisional performance, and in that, first of all, we have to calculate the expected annualized return on investment using the new method as preferred by the senior management. In requirement B, we have to calculate the annualized residual income for each division based on the net profit figure for the month of July. And then we have to discuss the expected performance of each of the two divisions using ROI and RI. There is one separate part, but I will be reading it or discussing it later. First of all, we will be covering requirement A, B, and C. So as usual, first of all, see the background information and then we will cover it. And in the meanwhile, I am switching off my camera and muting my mic. However, if you have any question during that, you can ask and I will be in front of my screen. I hope you all have read the question. Have you? Have you all read the question? At least Essen has done that. Any point you haven't understand in the background information? Any point? So let's start discussing the question. Now this is a very simple question, and in that I have to calculate the annualized return on investment using the new method as preferred by the senior management. So the senior management has proposed that now we will be calculating the ROI using the net profit and not the controllable profit. Right? So now let's calculate the ROI. The ROI, and we will be calculating it for division B and division C as well. So the formula will be equal. For division B, it is net profit, which is 311 multiplied by 12. The reason for multiplying it by 12 is because this is the monthly statement. This is the monthly statement. But we have to calculate the annualized. So we have to convert the monthly profit into annual profit by multiplying it with 12. I will then divide it by the net assets, and the net assets are 23,200. It is 23.2 million, but this value is in $1,000. So the base should be the same. So the answer is 0.1608. Let me just convert it into percentage. So the answer is 16.09%. Division B's ROI is 16.09%. Now similarly, we can calculate it for division C, and this will be equal 292 multiplied by 12 divided by 22600. And if I now convert it into percentage, it is 15.5%. So this is all about the first requirement, in which I have to calculate the annualized return on investment. Now in the next requirement, we have to calculate the annualized residual income for each division. And this should also be based on the net profit figures. So let's calculate the RI. And as usual, I will be calculating it for division B as well as division C. Now the formula for the ROI is net profit less imputed interest. By the way, just for your information, imputed interest equals to division net assets multiplied by cost of capital. So the cost of capital for the company is 10%. So the imputed interest for the divisional net asset will be 23200 multiplied by 10%. I have to use the equal sign. Let me add one line as well to mention that all my working is in $1,000. The net profit in the month of July was 311 multiplied by 12. So it is 2732. So the divisionalized RI is 2732 minus 2320. It is 1412. This is the residual income of division B. Now let's talk about division C. The annualized net profit will be 292 multiplied by 12. So the net profit for the year will be 3504. And the residual income will be 22,600 multiplied by 10%. So the imputed interest for division C is 2260. And so the residual income is net profit minus the imputed interest, and it is 1244. So this is the answer for requirement C. B rather. Now in the C requirement, we have to assess the performance. Now the way to assess the performance is same that I had covered in the variance. That first of all, I will assess the ratio, then I will discuss its reason, and finally I will cover the conclusion of the performance. So let's discuss that. Let me increase the zoom in. So the performance of division. Now we will be covering using ROI, right? So first of all, the ROI of the division B is 16.09%, and for division C is 15.5%. Right? Now let's go to the reason. In fact, I should also write the target over here. This is well below the target of, and what was the target? We have to see the question once again. %20. Now let's assess the reason. The reason for this is due to using the net profit values instead of controllable profits that were used to do. Right? So because there is an apportioned head office cost, and this cost is beyond the control of company, rather the of division managers. So the said ratio does not reflect true performance. Right? To reflect the fair performance, we should use the controllable profits and what are the controllable profits? For division P, it is 466,000, and for division C, it is 472. Then the ROI will be, so you have to calculate it manually. This will be 466 multiplied by 12 divided by the value of net asset, which is 2C200, and then multiply it by 100%. So when you calculate it on your calculator, the answer will be, how much will be the answer? Anyone? Please calculate it. Similarly, for division C, it will be 472 multiplied by 12 divided by 22600 and then multi it by 100%. And what will be the answer? Oops. The answer will be 472 multiplied by 12 divided by 22,600. So the answer will be 25.06%. So based on controllable profit, the ROI of both the divisions is better than the target of 20%. So this will be the analysis based on the ROI. Based on the ROI, right? Similarly, you can discuss it, a brief discussion using the residual income as well. So any question on that? Any question? Now let's move to the D requirement, and it says Division B has now been offered an immediate opportunity to invest in new machine at a cost of $2.12 million. The machine is expected to have a useful economic life of 4 years, after which it could be sold for $200,000. Division B's policy is to depreciate all of its machinery on a straight line basis over the over the life of the asset. The machinery would be expected to expand Division B's production capacity, resulting in 8.5% increase in the contribution per month. So we have to recalculate the Division B expected annualized ROI and annualized residual income based on July's budgeted operating statement. So we have to recalculate ROI and RI. And for Division B only. So let's first calculate the revised ROI. In my revised ROI, my net profit will be split into two. One is the current net profit. And then the additional profit. Now the current net profit is how much? It is 292. Of course, I will be working in $1,000, so it is 292, and the additional profit will be, now in the statement it has said that this will be increased by 85% in contribution. So division B's contribution is 700. That means the revised profit will be 700 into 8.5%. But this will only be the contribution. There is no additional fixed cost. And the only cost that I have to include is the depreciation cost, which is on the straight line. So I have to subtract the depreciation cost, which is 2120 minus 200, the residual value, divided by the life of an asset, which is 4. So this will be the calculation for the depreciation cost. So the additional profit will be, I have done a mistake, and what is that? I have to multiply it with 12. This is because the additional profit should be over the whole year. Is there still a mistake that I have done that? There was 700 contribution. For the whole year, the contribution will be multiplied by 12, and the additional contribution will be 8.5%. So this will be equal 700 into 12 into 8.5%. So the additional profit will be 714. And what about the additional cost? If you can read the information, it says that we will be buying the asset of 2.12 million, and its residual value will be 200,000. So the annual depreciation will be 2120 minus 200, and I have to divide it by 4. So the answer should be 480. So this should be positive. Let me see what error I have done that. So 700, oops, yes, over here. Instead of dividing it, I had mistakenly multiplied it with 4. To calculate the depreciation, I have to divide it by the 4, which is the useful life. So the additional profit is 234. The current net profit should be equal to 92 multiplied by 12. So that means my revised net profit will be 3504 plus 234. It is 3738. Right? Now, the additional investment. So the current net assets are how much? It is 22,600. And the new investment will be how much it is? 2120. So the revised net assets will be 22,600 plus 2120. So the revised ROI will be based on revised net profit divided by revised net assets. So it is 0.1512. So let it convert into percentage. So it is 15.12%. Now let's also calculate the revised residual income. And this will be easy because I have to use the revised net profit and then I have to subtract the imputed interest. The revised net profit is how much? I had calculated it right above that. It is 3738. And the imputed profit will be the divisional net asset multiplied by 10%. So the residual income will be 3738 minus 2472. So it is 1266. So this is the answer for requirement D. I hope you all have understood that. Right? Now coming to the last question of the day. And in this question we have three different requirements. First of all, calculate the average price for hair service per male and female client for each of the years in 2008 and 2009. So this is the calculative one. In the B requirement, we have been asked to assess the financial performance of the saloon. And in the C requirement, we have to analyze and comment on the non-financial performance. So this is a pure performance related question. Now, how do we do that? For that, first of all, as usual, let's read the background information and then we will discuss it. So it is a fairly lengthy question, but I request you all to read it quickly. So I hope you all have read the information by now. And this is the most traditional method of asking the performance measurement question. So let's first quickly discuss requirement A, in which I have to calculate the price of both male and female version in both the years. That is 2008 and 2009. Male and female versions. Now in 2008, the services was not open for the male versions. So that means there was no service for the male version. So the price in 2008 for the male version was not applicable. And that will also mean that all the sales revenue was of the female versions. That means the whole $200,000 sales will be attributable to the females, and the number of female clients are 8,000. So this will be 200,000 the total revenue divided by 8,000. So that means the average price in 2008 for the female service is 25. Now in the question we have been told that the average female price is same for 2009. So that means the $25 price will be for 2009 as well. But let's discuss what would be the price for the male in 2009. So first of all, if I could work out, the total sales revenue in 2009 was 238500. But out of that, 6,800 females were there, and to whom you have charged $25. So if I subtract the total sales revenue of the female, I will have the total revenue of the male version. And this is 68,500. So if I divide the 68,500 with the number of male clients, it is 3425. I will get the answer of 20. That means the price of each male is $20. So this is the answer for the first question, first part. Now let's move to the next part. And the next part is to assess the financial performance. There are more than 90% chances that when the assessment of financial performance or the non-financial performance question will come, then you will not be facilitated with the spreadsheet. So you have to perform all the calculations using the Word. So I will be covering this question using Word. Now, whenever there is a question on the financial or non-financial performance, the first thing you should do is to assess the ratios. So you should write the heading and calculate ratios. And the possible ratios that you will be calculating is sales growth, the cost of sales, increase in cost of sales, the gross profit margins, and then the overall increase in expenses. And how do I do that? I will write sales growth. This will be worked out as 238,500, the sales in 2009, divided by the current year sales of 200,000. Now, if you calculate it on your calculator, the answer will be, so you have to use your own calculator even in the CB exam as well. It will be 238,500 divided by 200,000. So the answer will be 1.1925. Or increase of 19.25%. If you convert it into percentage, you have to ignore the value 1 before the point, and the answer will be 19.25%. Similarly, you can calculate increase in cost of sales. And this will be 126,000 minus 94,000. So 126,000 divided by 94,000. And so the answer will be, if you calculate it on your calculator, it is 1.34. 3404. 1.3404. Or increase of 34.04%. Then what is the gross profit margin? This will be of two years. One is 2008. And in 2008, the gross profit margin is 106,000 divided by 200,000 multiplied by 100%. So this will be 106,000 divided by 200,000 multiplied by 100%. And the answer will be, let's calculate it on the calculator. Oops. I have to open the calculator. It is 126 divided by 200. Sorry, it should be 106 divided by 200. It is 53%. Similarly, for 2009, it will be 112500 divided by 238,500. Multiply by 100%. So the answer will be 47.17%. Similarly, you can calculate it for the increase in operating cost operating cost and also the net profit margins of each year. So this is the first thing that you should do. You should first of all have to calculate different financial ratios, and what's different in that question is that there are high chances that you will be provided with the word pad or the worksheet and you have to calculate it on the word pad. So you have to do it like this. You have to make each heading, you have to show clearly the working, and then by calculating on it on your calculator, you have to write the answers. So once you calculate all the ratios, all the relevant ratios, you will write the heading of analysis, which should be financial analysis. Right? And then you start analyzing the question, analyzing the performance management. Now the rule to assess the performance is same that I had covered today. And so today, due to the lack of time, I will be discussing this part of the question, the analysis part of this question especially, tomorrow at the same time. Right? But I request you all to please reread the complete information. Try to complete as much possible ratios with you so that in discussion you can give me input in that as well. So for tomorrow, although it is question and answer day, but for the first say 15 minutes, I will be covering this answer and then I will take as many questions as possible from you. And tomorrow you can ask any question regarding F5, regarding the issues in the F5, regarding any topic of F5. So anything you can ask, I will be available for you. Right? So any question up till now? Any question? So there isn't any question right now. So I presume there is none. So that's it for the day. Thank you very much. I will be very eager for the tomorrow's session because I will be excitingly answering all your questions that you can ask. So this is a good opportunity. So that's it for the day. Thank you very much and take care for yourself.